Going live? Not yet. Hey, everybody.
Hello.
Hello, and happy Tuesday evening. Pop on and say hello, everybody. Tell us where you are viewing from and what you're sipping tonight. We're sipping, I think, what do you call this again? A margarita of some sort?
Mojito.
A mojito. Okay. So that's what we've got going on over here. How about you guys? How are you? And how's your week been so far? How's your week been? How's your day been?
Today's been busy. Research.
Yeah. So research
Fixing
for you.
some videos for some clients that I did for them. Looking up trends for some other clients because we're seeing, it's that time of the year. Prices going down, inventory is going up.
Yeah.
So rates are all over the place.
I feel like we've suddenly gotten so busy. We've had a lot of buyers who've waited until the fall, and I feel like things have just kicked in so much and just been like so much more busy this week. Guys, today we've got some really good articles. We're going to talk about what actually happened to mortgage rates when the Fed did their big cut that we expected them to. Got a couple articles to read. First off, though, let's have everybody chime in. Okay. Pop on. If you had to predict the exact 30-year fixed mortgage rate by the end of 2025, the exact one, what would your guess be? Exactly. What do you think it is? What's your exact? And hey, Rhonda, I'm so glad you popped on. Hello.
6.2356789.
What is that like? Gonna keep going? Okay, so he's saying 6.2. Well, you know what? That's a hard question too, because you got to think about like which type of which type of work. So 30-year FHA.
That would be 30-year.
30-year FHA.
But now they're at
what do you think?
607.3.
No, they were like at 5.5 last week.
No,
FHA.
Today I looked it up. 607.
He's not right.
607.3.
At least he's not right according to our preferred lender. You can show me all day long.
I'll show you. Yeah, preferred lender.
Okay. We're going to sit here and argue, guys. Hello, Wendy and Dale. Okay, so we're clearly in a disagreement over today's rates. We'll look at it. Yeah. And that's from Caleb? Because he told me that's not what he told me. So
today?
Yes, what he just emailed me. Anyway, guys, sorry. Just just excuse it while the married couple sit and have a dispute.
So he needs to fix his website.
How about you guys? Okay, if you had to predict the exact 30-year fixed mortgage rate, let's just say it's FHA, maybe 5.5, 5.25. What do you think? No. Okay, let's look at the next question. Okay. Quick gut check. If the Fed cuts rates again next month, do you think sellers or buyers would benefit more, or builders who are also sellers? But sellers, buyers, builders. What do you think? Who's going to benefit more if the Fed cuts rates? Yeah, just if the Fed does it. What do you think? I know that's kind of a loaded question. Okay, all right, Rhonda. I think Rhonda is with me on this. The 5.25, and Purple Drink says 5.2. Okay, I can kind of see that. I think so too. I think, let's see, both. Okay, so you think the FHA, yeah. And I can, and this says buyers. Oh, okay, both and buyers. Okay, so who benefits the most? Purple Drag says both, and Rhonda says buyers. What do you think? Who do you think benefits the most?
I don't know. That's a tough one because there's
so
many things that could go different ways.
Hey, Jasmine. Jasmine says buyers.
One of the things that's been why the rates have come down is, and this is partly kind of like what I talk about, and then also what you sent me in this little video too. It's about the treasury bonds and the gap between gaps becoming closer, so the rates allows the rates to come down.
Yeah,
but it really just depends on what investors feel like.
Isn't that the truth?
It's an emotional thing.
It really does seem to come down to it being an emotional thing. It's crazy. Okay, so where do you think? It's kind of the same question. Where will mortgage rates be in 6 months? Lower, about the same, or higher than today? So 6 months would be like March of next year. So our mortgage rate's going to be lower than today, about the same, or higher?
Wow, that would be scary if they're
I feel like
much lower in March.
Yeah, I just feel like if Jerome Powell's term retires in May, I feel like for sure that Trump's going to get somebody in there that's going to be very much towards lowering them. So I feel like personally, I think they're going to be lower.
But
But
I think, I don't know if we could get, like FHA in the low fives and conventional in the upper fives, low 6.
mhm.
I think that would be good. And any lower than that, I think people won't be able to afford the homes.
Yeah, I mean, that kind of begs the question is like, how low do we want them to go? How much lower do we say, no, don't go lower than that? Like,
We're
do we
almost
have a
there.
floor on this? Like, hey, I do not want rates to go lower than this.
We're almost there.
Yeah. Okay. Geo says lower. Yeah, I think they're going to be lower also. But if you were to put
Don't-
out a one that said, I don't want it to go lower, would you say FHA 5%? You don't want it any lower than that? Or would you say,
I think that's already too low.
you think that's already too
Yeah.
low? I kind of feel like anything in the 5s. Like, I think don't move down below 5. That's my opinion. Interested to hear what you guys' is. Mr. OL says hello. Good evening.
Good
Hi.
evening, Mr.
I love the dog in your picture. I'm a dog lover too. We've got 2 dogs in here right now. They almost always misbehave at some point during the show. All right, Purple Drink says, I think anything lower than 4%. I do agree with you that anything lower than 4% would really
That would
be unhealthy.
Really crazy.
I'm kind of, I guess, a little bit more than thinking
Bruno
like
the
5%.
Beagle.
Oh, I love it.
Can
Bruno,
he-
my beagle.
Can Bruno predict rates?
Yeah. Bruno looks pretty smart from the picture. I just think beagles are so cute. Okay, Mr. OL says, and I say lower. So it seems like everybody's thinking that the rates are going to go lower. Yeah.
I mean,
Yeah.
you like lower rates because of lower,
Mhm.
potentially lower monthly payments, but
Yeah.
prices are going to go up. It's already happening.
I would like the market to even out. I completely agree. And he can predict feeding times. Well, yeah, I mean, like, so can ours, and they become very demanding right about that time. Like, we always have to have their food bowls in here when we do these. Otherwise, it gets like they cause way too much commotion. We do want to share with you an experience before we start our article. Dale was saying prices. He was talking about prices going up. And so we want to tell you what we experienced this weekend because it was outrageous. It was ridiculous. It was just like should be illegal kind of thing. and yet it wasn't. So I'm going to tell you this. I meant to pull up the MLS on it too. So this is what happened. Okay. We have a buyer and interested in a Normandy home, and Normandy has it listed on Zillow on the MLS. Okay. For $552. Okay, that's what it's listed for, 552. Okay, guys, 552. That's what's listed for. Of course, we come in lower than that because we always try to come in a little bit lower. And their counter to us, guys, you're not going to believe this. Okay, their counter offer to us, and these are the builders who know those rates are going down. Okay, their counter offer to us was, oops, it's supposed to be listed for 595, but we'll agree to 563. Okay, that was their counteroffer. So it has been on the market for like 6 months at 552. It started off at 574. Nobody was biting. They lowered it to 552. We come in right about the time these rates are going down, guys, and they literally tell us, even though it's on the MLS at 552, they tell us, oops, it was actually supposed to be 595.
They did change it.
Did they change it? He's looking it up right now.
575. Yeah.
So they just basically raised their price. Okay, so regardless of what's on the MLS, they tell us, oops, 595.
And I looked up the MLS rules say give you like a 48-hour grace period on changing.
So this does not seem like it would be legal, but the MLS gives you a 48-hour grace period. So they literally could have gone in there and made it into 595 if they wanted to. Yeah. But do you also see there, guys, the price manipulation, trying to make you feel you're getting a good deal for 563. So it's listed at 552 and they come back, oh, it's supposed to be 595, but we'll give it to you for 563. What do you guys think? Comment on this. Is it as outrageous? I just was incredulous. I was so mad.
Tell you, I can't remember. Well, it wasn't last year or last year. It was so at the end of 2023. Mm-hmm. And everybody was expecting rates to really come down in 2024, coming into spring and everything. Mm-hmm. And I talked to several builders, and every one of them said, yes, in fact, they'd already worked out what the prices were going to be.
Wow.
They were going to bump up the prices. They were ready to bump up the prices as soon as the
Mhm.
rates came down. It was, so that's not new builders they're going to say,
Back. I see screen rose, or is that just me? Say here frozen. Okay, thought it was my internet. No, it was not you guys. Something happened for us. We don't know what it was, but please tell us if we are showing up as back. Okay, hopefully we are. It was not your internet, Purple Drank. It was ours. We don't know what's going on, why our internet dropped off like that. But anyway, let me know if you guys can hear us again, and start off by telling me what you think about this Normandy sale. That ridiculous. Yay, there's Booker. Okay, must be seeing us. Okay, all good now. Oh, I'm so glad. I'm so glad. You guys, what do you think about our experience with Normandy Homes this weekend? Is that not outrageous? I mean, it kind of relates to what we're talking about because it has to do with how builders react when those rates go down. Just kind of like so.
yeah, as I was saying when we froze there for a 2nd,
Mhm.
It got really cold too, but just kidding.
When we
Anyways.
froze.
But what I was saying,
experience.
so the end of 2023, when everybody is expecting the rates to come down in 2024, coming through into the spring there and everything, a lot of builders I spoke to, they all said they were gonna increase prices right away. So
Mhm.
they already figured out what the prices would be. They were gonna bump them up. So I'm
Yeah.
sure they're doing the same thing now. They're not
Mhm.
even gonna tell you. It's just gonna boom
Yeah.
go up. So
But I mean, like from 552 to 595 overnight. Okay. Like, but then making it sound like you get a good deal by saying we will accept 563. It's like, do you think we're stupid? Like,
Yeah.
and like, but I just feel bad for buyers who don't have a realtor to know that it's whether it's supported or not. Anyway, that was our tale of woe, dealing with this whole issue of rates coming down and the different challenges. I would say that as rates come down, you really need representation more than ever. Expect for a lot of fast ones to be pulled, a lot of sudden price increases with new construction. And you just know that you need to know what that price is really worth. When they start raising prices by 50,000, do you really think that prices are going up like that? So yeah, it's interesting here, the Dallas market. I want to go ahead and show you guys, get back up here, and let's take a look at our article. Oh no, what happened? Oh, there it is. Okay. All right, you guys see that? Okay. I'm just like, oh, don't put us over here again. Okay, let's look at this article. But first, there's Sam. Let's see what Sam is saying. Hey, Wendy, what do you think about H-1B proclamation on Dallas new construction homes, especially North Dallas, as future influx is curbed and uncertain for foreign buyers with the buyer pool going down. What do you know about this?
They just increased the price for the for those visas for coming in for working stuff. So
okay, yeah.
I'm not knowing exactly how many of those people that we have that come in like that for buying and stuff. I don't know how that affects it, but so I would tell you for the people we worked with, they've all been citizens already. So even though they may have been coming from other places, they had to. So we've had them coming from all over. So
I think we've had one maybe that wasn't yet, if I recall. Okay, let's go ahead and take a look at this article, you guys. Let's go ahead and bring this up. Okay. So this article that I'm going to read, I'm going to start off with one that was done before the actual rate cut. It does a really good job of explaining what might happen, and then we're going to be able to see what actually did happen. Okay, so let's dig into this. What does a Fed rate cut mean for mortgage rates? That's a great title. I think what is a great call. In response to mounting warning signs from the labor market, the Federal Reserve is preparing to cut its benchmark interest rate for the first time in 9 months. So this is just before they actually cut it. Most economists and investors expect Fed Chair Jerome Powell and the rest of the FOMC to cut the central bank's overnight rate by a 1/4 point on Wednesday. And that's exactly what they did. Okay, so no surprise there. That's exactly what they did. Mortgage rates have already fallen in anticipation of the move, with the average 30-year fixed rate reaching an 11-month low of 6.35% last week. Okay, and that's and really pay attention to that. The in anticipation part. It's so important
because the markets, they work that anticipation into their prices already, and so it's the same thing like what we were talking about before. The investors, they don't go by what the Fed's doing per se. They go by what they think the economy is doing in certain areas and stuff like that. So that's,
you guys be thinking about that strategically. If you're looking to buy, pay attention to what the messages are and not so much the timing of when the Fed's actually going to act. It's more about the messages, okay, and how the market is anticipating it. All right, let's see here now. Where were we? Okay, it comes as welcome news for prospective home buyers who stand to benefit from the lower borrowing costs. However, for those who are holding out in expectation that mortgage rates will automatically fall further after the FOMC meeting, disappointment may await. SPX financial markets, just exactly what you were just saying, have already priced in 3 25 basis point Fed cuts before the end of the year and 3 further cuts of that size by the end of 2026.
So that's going to be interesting because I think this probably, I guess I could let you read the article, but I think they're not necessarily going to do 2 more cuts now.
I guess we'll see. Okay, this means that the markets have high expectations for the Fed's upcoming rate cuts, and the market could very well be disappointed by a slower Fed pace. Okay, if the FOMC decision is contentious and split with dissenting votes against the cut, or if policymakers issue forward guidance that doesn't match the market's expectations for future rate cuts, mortgage rates could move higher in response. And I think that this phrase right here, this section made it so worth reading this article, okay, because it's that whole idea of what do they say when they cut the rates? What forward guidance? It's all about the speech. Okay, let's keep going here. A similar scenario, very similar, played out in September of 2024 when mortgage rates plunged to a 2-year low ahead of expected Fed rate cuts. But then rates began rising as it became clear that the Fed cuts would not be as extensive as markets expected. I expect this drop in mortgage rates to continue at least until the upcoming Fed meeting, says Hale. After the Fed meeting, however, I expect that mortgage rates are more likely to steady or even edge higher because markets are positioned to expect relatively more easing and could be disappointed by the Fed's forward guidance. So everything you've been saying, right? So yeah, it could be. Okay, why the Fed is cutting rates now? Well, to curb inflation, and the Fed uses higher rates to curb inflation and lower rates to boost the job market. So the two halves of its dual mandate. Citing fears of lingering inflation, the Fed has waited all this time since December. They haven't really done anything. But now, all right, a string of alarming reports revealing weakness in the labor market is finally prompting the FOMC to act, as well as giving Trump and other critics support for their contention that the Fed has waited too long to act. All right, the initial blow came in early August, days after the last FOMC meeting, when the Labor Department issued a sharp downward revision to prior job growth numbers for May and June. Subsequent revisions show that the economy has added just 27,000 new jobs on average each month starting in May, far below the 100,000 pace viewed as necessary to prevent rising unemployment. Okay. As well, there are now more unemployed job seekers than job openings in the country for the first time since 2021. And last week, new unemployment claims, a sign of layoffs, jumped to their highest level in 4 years. So this is labor market woes all over the place. All of this provides the Fed ample reason to cut rates. However, at the same time, inflation has begun to rear its head again, with overall inflation rising to 2.9% annually in August, presenting the Fed with a thorny dilemma. Okay, that was a good article predicting everything that might have happened. What actually happened? All right, shall we see what actually happened?
Sure.
All right, you guys, you remember last week I had on here our preferred lender giving us a rate quote. His name is Caleb Buchek. I've never known Buchek. This is what he quoted us, okay? And this was last week. All right, and so we talked about this at some length last week. Conventional, 30-year fixed was paying 0.6%. VA was paying 5.5, and FHA was 5.5, and that was good. I was pretty. Honestly, I was really excited about that 5.5%. Okay, so that was last week, and this was Tuesday night. So the Fed announced on Wednesday, right, what they did, and so this was right before the Fed lowered by that quarter point. Okay, so let's go ahead and take a look at what it is today. Okay, this week, paying no points is 6.3%. Paying no points VA is 5.75 and FHA is 5.75. So again, comparing, last week we were at 5.5, right? This week at 5.75. So what the heck just happened here? You can see it's even a point, it's a quarter difference, which is exactly how much the Fed cut. It's like a quarter difference. What are your thoughts? Is this what you expected?
I think, well, they already, it's like, because they were a little bit, I think, already disappointed because there were so many dissenting votes. It wasn't like very unanimous or very collective together about lowering the rates.
Ultimately,
so when they had
was,
when they did lower the rate, but what I'm saying, there was a lot of dissent. So which means they're not so sure about what the next cuts and stuff. So they price ahead, price in. So
it's like we've got
this.
They
went back up a little bit.
So we got this crystal ball thing going on where the market's anticipating what the Fed is going to say. And then when the Fed isn't as dovish as they thought it would be, then they adjust back.
Not as bad as they were before. I mean, they came down a lot. So
they have,
big
guys.
Drop, so
they've come down a lot because remember, we were at like 7.08 back in May.
Yeah.
So they're still lower, and 5.75.
Well, then in 7 in August.
You're right.
For a
you're right. It was, wasn't it? Yeah. So it's already down quite a bit, enough to make a difference of like a few $100s in your mortgage payment. Yeah. So even right here,
$200 to $300, depending on your.
Yeah, but I would say, guys, for sure, listen to the word on the street, okay, in terms of like when to lock your rate if you're looking to buy, because so much of the time it's how investors feel, it's their perception. And then when the Fed actually speaks, then that changes things if they're not as dovish as, the market wants. All right, let's see what we have here. Okay, now, spoiler alert, mortgage rates ticked up. after the Fed cut, following a familiar path. Mortgage rates have inched higher after the Federal Reserve cut benchmark interest rates, a counterintuitive but common phenomenon. Okay. The average 30-year fixed rate mortgage rate was 6.35% on Friday, up from 6.13 the day before, which was last Tuesday. The Fed cut rates, according to Mortgage News Daily. Mortgage rates ticked up after the central bank delivered its widely expected 25 basis point cut, with Fed Chairman Jerome Powell cautioning that there is no risk-free path as the Fed tries to navigate a weakening labor market and relatively hot inflation. And so you can see, guys, that's where it came in. That in that first article where it was talking about forward guidance, right? How the Fed speaks. It's like when Jerome Powell gets up there and speaks, man, it is like every word, every sentence is like carefully orchestrated. Like he knows there's not a single thing he says off the cuff there. It's like every single thing is so orchestrated. So yeah, not the best of not. I mean, the rates are still lower, but it's like, how do we didn't. This is not necessarily what people wanted to see. The Fed doesn't directly control mortgage rates. Okay, I think we all know that, though its interest rate decisions can influence them. And that's the big thing there. It's an influence. Okay. Our policy rate changes do tend to affect mortgage rates, Powell said. Yeah, you think so? That has been happening, and that will, of course, raise demand. Okay. Speaking of raising demand, okay, so this is what I've seen. And guys, by the way, please feel free to post your comments in the chat, post any questions you have, new construction, anything like that. We are definitely right here to answer any questions you have. But yeah, so we'll get to those and just say, well, you know what, let's go ahead and we can pop that on there. Yeah, rates aren't the issue. Prices are the issue. That is and I will tell you this, within that camp, I get a lot of comments on my YouTube videos about this, and it's very hotly contested. People feel very strongly about this, either that it's through rates or it's through prices. And there you go. Skyfall says, Powell cannot fix this. It's going to be interesting to see. It definitely will. Hey, Isaac. Hello, Wendy and Dale. It's always good to hear both of your brilliant analysis. Thank you so much. We really enjoy that side of it. Okay, let me see here. Let's pop back into our article here. Where were we? Okay. All right. 10-year Treasury yields, which mortgage rates closely track, initially fell on Wednesday after the cut, but ended the day higher. They rose again on Thursday after new data showed a sharp drop in unemployment claims. So again, you can kind of see this idea of how it's so much more. It's like, yes, the Fed plays a role, but there's so many other factors that come into play. All right. Consistently. image. Okay, guys. Yes, it was buffering. Okay, let me see here now. Am we on there? Let me do this. There we go. Welcome back. Welcome back,
Yeah,
mister.
where'd you guys go?
Where'd you guys all go? Isaac, here we go.
something-
Yes,
yeah.
Isaac, we checked in on him. And then we got Mr. Owell saying, I think this will take time to fix, as any knee-jerk reaction could have second and third order effects. I agree with you, Mr. Owell. I think that's very wise. Yeah, absolutely. And then we got a couple people letting us know the feed is choppy. It sure was. I hope it's not now. Drop the feed again. Yes, I hope it's not. Oh, this is great. Look at that. Thank you. I love it, Skyfall. We like you. You need to jump on here more often. Powell is hacking your internet. Good now. Okay, good. Thank you. Thank you, Rhonda. I'm glad to hear that. I think the job market is affecting the rates. Absolutely.
Yeah,
I
that's the
think
big one, really. Is
that's
because,
the I mean, that's the only thing that got
but it was,
you know.
and it was, I don't know if it was falsely reported, but it was definitely misleaded. So,
yeah, it
and
was
it
very
wasn't-
misleading what we were getting
Yeah.
in the summer months when it was just so far off.
And it wasn't even just in the summer; it was even before that. It was earlier, and I think that's what a lot of happened. They were, the end of 23 going in, or end of 24 going into 25. They were expecting, because they kept showing higher job market, better, and it wasn't so much.
Yeah.
So, and that's why the rates were going up. So.
Well, I know a lot of people were telling me that you get these jobs report with with these big numbers, but it was kind of more like the word on the street was like, there's no way that's accurate. I mean, people just knew that wasn't accurate. You'd look at it and be like, no, there's no way. So accuracy is such a big problem.
And most of the job stuff like that is more about, again, it's kind of an investor thing. You think about these, it's the same thing. These companies, they're looking just the same way as investors. They're looking to see, okay, what is the economy going to do? We need to plan for that ahead of time.
Yeah.
So what do we do with that? So maybe we don't hire so much right now. Or maybe same thing with investors. Right. Maybe so we're going to look at.
What we're seeing, it went off on us again. We may have to call it a night here. We don't know why we're having these crazy, and you know what, I haven't had a problem with internet all day. It's been working just fine. I don't know why all of a sudden. Purple Drink agrees with you though. So there you go. Let me see if I can make it, if I can get us through this last bit before we lose signal again. Let's see here. Get that back on there. All right, and we will see. All right, where mortgage rates go next is anyone's guess. Okay.
Just jump to the good stuff.
All right, with financial markets, this is almost the end of this article. Anticipating a more rapid ease of monetary policy than the Fed is likely to deliver. Wow, check that out. Mortgage rates aren't likely to fall much further. What do you think? Yeah.
Maybe so. I mean,
they don't like the subject tonight. Exactly. The gods, the internet gods are like, hey, we won't let them talk.
Yeah, I mean, if there's a lot of uncertainty, maybe that's the thing. I think more than just having lower rates, I think we need steadiness. We need,
yeah. So, well, it's interesting,
and that will help the economy all the way around. So,
and it is. I mean, it's interesting. All of us on our first question, we all thought rates were going to go lower than what they were. So this says mortgage rate. So I don't know. I don't know if he means like just right now or like, for how long.
Knows?
While mortgage demand is showing signs of improvement now, home sales have been slow for much of the year. That's very true, as buyers struggle to afford near record high home prices and mortgage rates north of 6%. Lower rates alone might not be enough to boost the market, Powell said. So that kind of goes back with what Skyfall was saying. Skyfall was saying that this is not something that Powell can fix.
Yeah, definitely.
You know, and
Oh,
that lower rates won't do
A lot of people
it.
will say that. I mean, a lot of
Yeah.
the people that have good, if you look at what they predict and stuff, their trends are really right on.
Yeah, yeah.
It's
And
nice
Skyfall, that's
they're not
what
gonna
that you were
fix it,
saying too.
but-
Powell can't fix this. So this said mortgage demand. Now I will say this though, which is I've seen that refinance activity is through the roof right now.
Yeah.
That's, you know, and you know what, that reminds me, we were going to have Caleb join us tonight, our preferred lender, and he couldn't make it because he's busy. All of a sudden he has all these refinance apps going on. So everybody's wanting to refinance. So, but whether or not it's going to pick up, you know, new purchase applications, that's your big question. I think most analysts think it has to be big changes to matter a lot for the housing sector. And I think you would agree with that it's going to have to be big changes. So what, I don't know, rates are powerful. Like, what do you consider a big change?
Steadiness.
Yeah. All right. Well, we got through our article, so that was good. You guys have any other questions? Anything you want to drop? Yeah, I'm sorry we've had such a weird signal issue.
Maybe it's the tech market in general, and that's always where the first layups are anyway. So
yeah, that is true. In fact, I'm getting ready to release a video where I talk about how our pricing tiers have been affected by tech layoffs.
Somebody was asking about the H-1B, and that's probably where you'll see the most effect in that. Wherever they will buy houses or rent houses, that's because they mostly come in for a lot of them. Well, the majority of them are coming in for a tech job. So
yeah. All right. Yeah. I actually think the auto delinquency market is what will pop the everything bubble. It's not sustainable. That is a really interesting. That's a very interesting viewpoint. Yeah, I think inflation really affected the auto market for sure. And Rhonda agrees with you. Awesome. That is so interesting. Guys, interesting story. We have a 2014 Ford Expedition where the engine literally blew out completely, and we paid cash for it for $43,000 2014. And we were like, well, do we fix it, replace the engine, or do we get a whole new, a whole new Ford Expedition? And literally the cost was almost double. Right. And so it was only going to cost us like $15,000 to replace the engine.
Yeah.
Was it more than double?
So to
completely get a new one. Yeah. So we had paid $43,000 for it. I thought you said it was going to be okay. Yeah. So auto inflation with cars, and that's just I'm really, thank you so much for chiming in on that, Skyfall. That's a very good point. Auto delinquency market. If you think about how much vehicles have gone up, how much inflation affected.
They're saying it's not as bad as it was in 2008, but it is definitely going up. So
interesting. All right, you guys. Well, if nobody else has any questions, we may not tempt luck anymore here, tempt fate with the way our internet signal has been. Yeah, technology has just not been good to us.
Let's see what's going on with it.
Yeah, we may have to go check that. All right. Oh, one more comment, and then cars built after 2018 are built for lease, but dealerships trying to sell them to you. Selling them to you.
Well, but leasing though is a lot more expensive now because now they require a much higher upfront cost.
Oh wow, yeah.
For that, so yeah.
All right, Rhonda said, "Have a good night." Yes, and with that, we are going to log off. Hope this was helpful. Right now. All right. So we're gonna here, like next week.